Hello everyone, my name is Marilena and I'll be your hostess for today. Together with me I have Peter. Peter is our senior market analyst at IronFX. Hello Peter.
Nice to be here.
Thank you for joining us today as we're looking at the fundamentals that are driving the markets currently. Peter, how have the markets been behaving today?
Well, we had a number of issues driving the markets. Currently in the headlines, we could mention a couple. Making a start maybe with definitely the US dollar, and we had a release yesterday with the Fed's meeting minutes from May. I would dare to note also that Russia seems to be rushing towards a weakening of, or to at least to prevent a rally of the ruble. It has, the Central Bank of Russia has performed a rate cut today from 14% to 11%. We would also like to note that in the UK, PM Johnson is trying to more or less skip the Partygate scandal, which occurred during the lockdown period. And last but not least, we would tend to note also some worries about oil price on the rise, given that there seem to be increased costs for oil at the current moment, both shipping as well as producing.
Nice, interesting. Did the release of the Fed's minutes actually affect the USD?
Actually, not so much. We had the release, which the contents of the document were more or less expected. There might have been a slightly less hawkish tone in the documents than was actually expected. It didn't provide the substantial support which the market may have been waiting for the US dollar and crashing lower for the US stock markets. The minutes showed that practically policymakers tend to maintain the view that they are decisive in curbing inflationary pressures within the US economy, with steady rate hikes to come. It seems to be that the 50 basis points rate hikes are going to be the norm for the next couple of meetings.
Yes.
At the same time, there seem to be also voices of Fed policymakers which tend to point towards a pause of the Fed's rate hike path, and probably that would be in September. Analysts were quick to note that such a pause could provide some relief for US stock markets, which have been tumbling for a while now. At the same time, though, we have to understand that the Fed's primary target is to curb inflationary pressures. And I don't think they will be showing any hesitation on that end, especially as long as the US employment market remains tight. That could enable them to perform more rate hikes and actually continue the monetary policy in order to curb inflationary pressures.
And what about the US stock markets?
Well, US stock markets had rather mixed reactions, in my opinion. There's nothing decisive yet. Overall, there's still wide concern about the possibility of a recession and a global economic slowdown. There are factors which could affect substantially the stock markets, the US stock markets, not only the US stock markets, in coming months, especially whether the Chinese economy is going to be slowing down.
Yes.
Or what effects there will be, what further effects there will be from the war in Ukraine. And it was characteristic that the last factor was also highlighted in the Fed's meeting minutes yesterday, where practically the Fed mentioned the tremendous economic and human cost of the war in Ukraine.
Okay, and what expected to be the highlight of the day?
Well, the highlight for today is expected to be definitely the release of the second estimate of the Usd Gdp rate for quarter one. Expectations are for the rate to practically remain at very low levels. The preliminary release showed us a growth rate, actually contraction of the US economy in the first quarter of the year of around minus 1.4% on an annualized basis. I wouldn't expect much deviation here. The first quarter was an issue. And should the second estimate actually reaffirm that the US economy contracted, that could be a bearish sign for the US dollar as well as for US stock markets. The second issue, which I would also like to highlight, would be still from the US, the weekly initial jobless claims figure. A jobless claims figure which over the past few weeks has been on the rise and at least since last month has increased and tends to create some slight worries about the US employment market and whether there is an actual slack in the US employment market. Nevertheless, the employment reports up until now showed a tight US employment market. We expect that next week we are going to be having May's employment report. We may get a more firm footing on where the US employment market actually stands. And definitely policymakers will be watching.
Okay, moving to the next question. Also, isn't Turkey's central bank to deliver a rate decision today?
Oh yeah, that should be in the late European session today. Now, the Turkish economy, I'm not saying it has been struggling, but still has inflationary pressures. The last one was at almost 70%. It was 69.90 something percent year on year. It's a huge rate. The acceleration of inflationary pressures in foodstuff may be even greater. It should be noted that the Central Bank of Turkey last year had performed rather aggressive rate cuts. And the interest rate, the 1 week repo rate right now is standing at 14%. The bank is expected to remain on hold, keep the rates unchanged at that level. Should the rates remain unchanged, and that could imply an unwillingness on behalf of the central bank to actually fight inflationary pressures within the Turkish economy. And that could weaken the Turkish lira. On the flip side, we have to note that the Turkish lira has been weakening with an adverse effect also on the trade balance because imports have become costlier. So there seems to be a vicious cycle being created here, where practically the weaker lira is feeding inflation. And practically that could create a negative spiral for the Turkish economy. There is one catch here, which we have to take special notice of. That would be the tourist season, which is about to open in Turkey. And given that Turkey is one of the countries which has practically fewer of any sanctions against Russia, we could expect a wave of Russian tourists actually visiting Turkey and providing the country with hard currency. So it's a question on whether the Turkish economy will be saved by the tourism industry, but that's a possibility which is still open. And we have to wait and see how that plays out.
Okay. On another front, did the pound get some support yesterday?
Yeah, actually it did. However, the picture is not decisive yet for the pound against the US dollar, at least for cable. On the fundamentals, highlighting practically that John's government seems to be slowly but steadily overcoming the Partygate scandal, where we had parties being organized among public servants, and that was a big issue for the UK government, given also that the UK Prime Minister attended them. Yesterday, for the UK lawmakers, practically the UK Prime Minister called on them to overcome the scandal and move on. Should that be the case, that would mean practically that the UK government was the hook for Partygate. At the same time, there is considerable dissatisfaction among the UK public about the rising living costs in the UK, which are substantial. We have very high inflationary rates. And the UK government is about to issue new measures to support the economy. However, there is a very slight chance that they will be of actual substantial help for the UK population. At the same time, Bank of England sounds quite decisive that it will continue to hike rates, and that should provide some curbing of inflationary pressures within the UK economy. However, there are also substantial worries, because I would like to remind you that on Tuesday we had the preliminary PMI reading for the service sector. That indicator's reading dropped beyond market expectations, showing a slowdown of the expansion of economic activity in the crucial sector of the UK economy. And there are extensive worries about the possibility of stagflation for the UK economy, which would mean very slow growth rates, given also that BOE is to continue to hike rates, while at the same time inflation may remain high. And that would be a sort of a dead end, a very difficult situation for Bank of England to actually handle in the next couple of months.
Okay. And what about the yen?
Oh, the yen, we have some interesting comments. They were made by BOJ Governor Kuroda this morning. And the governor practically seemed to be slowly changing the course of the bank. Up until now, the bank had maintained a very loose and ultra loose monetary policy, negative rates, an extensive asset purchases program, and it seems to be discussing now the possibility that the bank may start debating, not at the current stage, but at some later stage, the exit strategy from the loose monetary policy of the bank. And practically that more or less could cause some bidding for JPY. For the time being, I would like to see more concrete evidence that the bank has actually changed direction before calling in the bulls for JPY. Time on a fundamental level, JPY is expected to maintain its dual role as a safe haven on the one hand for international investors, at the same time though also as a national currency. And tomorrow we're getting May's inflation metrics for Tokyo, which is a huge city, and the density of the population practically tends to foreshadow also inflationary pressure tendencies on a nationwide level. So should there be an acceleration of the inflation rates in Tokyo, that could be more or less foreshadowing an acceleration on a nationwide level.
And finally, how is CAD moving today?
Well, the CAD today has the retail sales growth rate, which is to be released from Canada, and there seems to be an acceleration expected. Should the retail sales growth rate actually accelerate, we may see the CAD getting some support here. That would be an indication that the average Canadian consumer is willing and able to actually spend more in the Canadian economy, thus also contributing to the recovery of the Canadian economy. At the same time, we would not underestimate also the possible effect which oil prices may have on the Canadian dollar, given also that oil is one of the main products of the Canadian economy, as is also natural gas.
Great. Thank you, Peter. Thanks everyone for watching. Join us after a short break for technical analysis with Peter Rsi.
Hello, everybody. So we're back for the technical part, technical analysis. You're seeing in front of you the chart, the 4-hour chart of the USD Index. That's where we left practically yesterday. Now, the downward trend seems to be continuing. Let me readjust the downward trend line. Here you go. So despite some slight bidding at the 102.05, let me readjust this as well. It should be noted that the price action actually tested the level today, and it seems to be bouncing. Nevertheless, as long as the downward motion and the downward trend actually continues to guide the price action, we tend to maintain our bearish outlook. On the other hand, I would be noting that the Rsi Indicator may be implying that the bears are still present, but seem to be using some steam here. So some signs of stabilization could be in the cards for the pair. And should that be the case, I would expect it to be around the 102.05, maybe a little bit higher. Should the price action actually break the downward trend line, and we would be able to see that in the next 12 hours, especially in the American session, that would practically imply that the downward motion has been broken, and we would switch our bearish outlook in favor of a sideways bias, and the sideways bias would be initially between the 102.05 and the 102.90. 102.05, which tended to provide substantial support here and here, while on the flip side, the 102.09 provided some support here and has now been turned into a resistance line, given that the price action has turned lower. Should the bulls actually take charge of the pair's direction, I would expect the pair's price action to actually break above the downward trend line. That's the first sign of a trend reversal, i.e. switching initially to a sideways bias. And if the bulls take over, I would expect the 102.090 to be broken clearly, and the price action to start aiming for 103.85, which provided resistance once, twice, maybe here 3 times. As an ultimate target for the bulls, I would be noting the 104.95, which practically capped the pair's upward action, and it's almost the highest level noted in our chart by the price action. To the downside, and should the bears actually maintain control over the pair, over the index, sorry, we would expect the price action to break clearly the 102.05 and start aiming for the 101. Now, that was a resistance line which provided resistance back here, and as the price action has now moved above it, has now turned into support line. Lower than that, we would note the 99.80 providing support, once here, twice, 3 times. It's a very notable support level. So to cut the long story short, we tend to maintain our bearish outlook for the USD index as long as the price action continues to move below the downward trend line, which initiated around the 13th of May. Should the downward trend line be broken, our initial reaction would be to switch our bearish outlook in favor of a sideways bias between the 102.90 and the 102.05, probably closer to the 102.05 should there be a stabilization. Let's have a look at Euro USD. Now, Euro USD is still above the upward trend line, which has started around the 5th of May. However, there is a catch here. Technically speaking, I would be highlighting that the pair had one high, the second high, and the third lower high. It starts to resemble a head and shoulders formation. If that's the case, we may see the pair actually breaking lower, maybe even below the 1.0605. For the time being, we maintain a bullish outlook as long as the price action remains above the upward trend line. Should the price action be broken, the initial reaction would be probably to switch the bullish outlook in favor of a sideways movement between, let me readjust these, there you go, between the 1.0605 and the 1.0740. Once again, though, we would like to note the volatility, which seems to be actually contracting. And it was characteristic that the Bollinger Bands are converging, the upper and the lower Bollinger Bands. And that tends to imply some stabilization. Also, that's being implied by the Rsi Indicator below the 4-hour chart, as it seems to be flattening out, nevertheless above the reading of 50, which could imply that the bulls are still present. Once again, in a nutshell, we maintain a bullish outlook for the pair as long as it remains above the upward trend line. Should the upward trend line be broken, we expect, initially at least, that the pair's price action is going to be moving in a sideways movement between the 1.0740 and the 1.0605. Should the 1.0605 be broken, that would be a signal practically to call in the bears. And we wouldn't be surprised to see the price action start aiming for the 1.0480. To the upside, and should the bulls maintain control, we may see the pair breaking the 1.0740 and start aiming for the 1.0935, which provided resistance here, here, and further back. As an ultimate target for the bulls, we would note the R3 1.1185, while as an ultimate target for the bears would be the 1.0355, providing resistance around the 13th of May. Let's have a look at the Kiwi. Some readjustment. Oh yeah. Stabilization tendencies seem to reappear for the pair, given also that practically you can see that the latest peak is at a lower level than the previous one. So we may be having some stabilization here. Once again, we maintain as long as the price action remains above the upward trend line. Should it be broken, we would expect a stabilization around the 0.6475, which was tested once here and broken before correcting lower once again. So you see a revolving of the price action over the past 36 hours around that level. To the upside, and should the bulls actually maintain control, we may see the pair breaking the 0.6475 once again. Let me readjust this. There you go. And start aiming for 0.6555, providing resistance here. And even higher than that would be the 0.6645, providing resistance here. To the downside, and should the upward trend line be broken, we would expect for the bears the first aim to be the 0.6365, providing support here and here, as well as resistance at this period and here. Lower than that, we would note the 0.6290, the S2, which provided some support here. Actually, at this point, the upward trend line was broken, even temporarily. Even lower would be the 0.6215, which is also the lowest point of the price action in our chart. So that could be providing some comfort as the lowest level so far. The RSI indicator seems to be stabilizing, yet once again remains above the reading of 50 just slightly, and could be providing some signs that the bulls are still here. Let's have a look at the pound. We had the relative question here. Now the pound has definitely stabilized. and that's between the 1.2640 and the 1.25. Actually, the resistance level here could be a little bit lower at 1.2610. Still though, I would trust this level more, as it had a clear indication of capping the upward motion. There was quite steep upward motion around the 5th of May, and reversing into it was a very strong resistance level, not to be neglected. To the downside, we had the 1.25 providing support here, and resistance here, here, support here, once again. So we tend to maintain a bias for a sideways motion for cable, at least until the 1.2640 has been broken, in which case we may be seeing the bulls taking over, and the pair to start aiming for the 1.2775, which provided resistance here. Higher than that would be the 1.2965 with a brief touch here. To the downside, and should the bears take over, as a first sign of a bearish outlook, we would require the pair to break clearly the 1.25 support line and start aiming for the 1.2330, which provided some support here and here. Should the 1.2330 be broken, that opens the way practically for the lowest level, and that would be the 1.2170, which provided considerable support here. Note how the price action was moving downwards and bounced practically on the 1.2170, back up and started to aim for the 1.2640, where it stabilized. Actually, once again, at 1.2610. The Rsi Indicator below the 4-hour chart seems to be implying some stabilization, but it remains above the reading of 50. So once again, the bulls should be no surprise, while the price action seems to remain in the upper half of the Bollinger Bands, between the 20 moving average and the upper boundary. Note how beautifully the price action practically was capped by the upper Bollinger Band right here. Okay, let's have a look now at Usd Jpy. Okay, there seems to be some bidding. Now this is an interesting chart on two accounts. The first account is that there was a downward motion which has been broken, and that was around the 25th of May. That was yesterday. Let's read this. $1.26. $1.27. 128.30, 129.75. So the price action has two characteristics. The first characteristic is that the upward movement of Usd Jpy practically broke the downward trend guiding the pair. That was the 18th or 17th of May. So that would initially force us to switch our bearish outlook in favor of a bias for sideways movement. However, we have to note that the price action has dropped. JPY got some bidding from Kuroda's comments earlier today, probably, and that forced the price action once again below the downward trend. Nevertheless, for the time being, some stabilization seems to be taking place. Let's have a look at the 1-hour chart. Yeah, for the past 2 hours. So the price action seems to be revolving around the 127 currently resistance line. I wouldn't be surprised to see it breaking above the downward trend line, break the 1.27 before again lower. We may be seeing now levels being created. That would be nice to readjust them. But that's still a very tight movement. I would like to see some more confirmation from me. Have a look. Pretty close to the price action, I know it. A new corridor seems to be forming based on the low points and the high points of yesterday. Let's move this a little bit higher, somewhere here, where you had some substantial support here, sorry, resistance here, and even higher at this level. I know it's wide, could be placed here as well. We had some substantial resistance once, twice. It was repeated here. It wasn't just a once off. So we may be readjusting here. Let's have a look also at the S2. I need to go further down the line for the S3. That stands. I would still prefer that. We could readjust it also somewhere here, where it was a prior resistance line and now support line. However, I think this was more repeatedly tested. 1.2355. Let's readjust this. This should be placed at 125.05. Let's have a look at the S1, the new S1, 126.5. I understand it's not a major readjustment, but seems to be validated. 127.55. There you go. $128.90. No, 85. And last but not least, 130.5. And 50. Now, there you have it. We have readjusted our support and resistance levels just slightly, but nevertheless. Now the picture of the price action seems to be stabilizing over the past 48 hours. So with this price action, I would expect it to remain in the corridor between the 127.55 and the 126.50. On the flip side, the Rsi Indicator below the 4-hour chart tells us a different story. Actually, the price action seems to have driven the Rsi Indicator lower, and it's currently between the reading of 30 and 50, reminding us of the bears probably still being present in the woods. Also note how the price action was not able to break above the 20 moving averages of the Bollinger Bands and remained in the lower half of the Bollinger Bands. Also could be implying a rather bearish sentiment. It actually bounced on the lower boundary before correcting higher. That seems to keep it in place. Beautiful chart, by the way. Let's have a look at the Aussie. The Aussie has also stabilized. That's clear. The resistance lines and the support line S1 and R1 have been confirmed. So we tend to maintain a sideways motion for the pair. Note how the Bollinger Bands are converting, implying that volatility is lower. Should the bulls take over, say for example, because the Rsi Indicator is on the rise and could be rising above the reading of 50, start aiming for the reading of 70, we may see the price action breaking above the 0.7125, which provided resistance here, here, and here, as well as support here, and start aiming for the 0.7180, providing resistance here. Higher than that, we also note the 0.7265, providing resistance around the 5th to the 6th of May. To the downside, and should the price action be taken over by the bears, we may see the pair dropping, breaking the 0.7035. That would be the first sign of a changing trend to the downwards. Note how the price action respected the S1 yesterday, but also as a resistance line, and that was around the 17th to the 18th of May. Lower, and should the S1 be broken, we note the S2 0.6950, which provided support here. And even lower than that would be the 0.6840, practically underscoring the lower level of the price action noted in our chart in the past 2 months. Yeah, that should be around it. Let's have a look at USD Chf. Swiss franc. Okay, that's an interesting move. Here you have it. So you have a stabilization of the pair, breaking line, guiding it. It was a clear downward trend line, despite this brief disruption here. It's a clear break. So we switch our bearish outlook in favor of a sideways movement initially before the market decides on the direction of the pair's next leg. I would like to note though that, let me readjust these. There you go. I would like to note though that the Rsi Indicator is still quite low. Actually, it's nearer to the reading of 30 than 50. So the bearish sentiment seems to be still present. Also note how the price action remains confined in the lower half of the Bollinger Bands. Once again, the Bollinger are converging, implying, I wouldn't say stabilization, but less volatility. I would expect the price action to remain between the 0.9670 and the 0.9550. I know that the levels are a little bit wide, yet at this point I would prefer this at this width. Should the bullish market sentiment for the pair take over, I would expect the pair's price action to start breaking above the 0.9670, and for USD Chf to start aiming, if not reaching, the 0.9760. Note how the price action had been capped at R1 here and at R2 here, also here. Higher than that, we have the 0.9875, which provided resistance around here. To the downside, and should the bears take over, as a first sign of a bearish sentiment and a bearish inclination of USD Chf's direction, I would expect the pair's price action to break the 0.9550, which provided support here, break below it, thus opening the way for the 0.94.10, which provided support here. While even lower, we note the 0.9285 providing support around the 11th, 12th to the 13th of April. Once again, note how the Rsi indicator is so close to the reading of 30. I wouldn't be surprised for the best to take over. We'll see. Next, USD CAD. Also in a sideways motion, also has broken the downward trend line, also tends to maintain a rather sideways movement below the 1.2855. There could be some readjustment here. As for the support line, as the range-bound movement becomes tighter, with an in-between support line being placed at 1.28. Nevertheless, we still maintain also the 1.2720, which provided support twice. It was characteristic how the level practically reversed the downward motion of the pair twice. And it was at both times a quite intense movement, and followed by an intense upward movement. Lower than that, we note the 1.2640, actually 1.2645, and even lower, let me readjust this, the 1.2540. To the upside, and should the bulls take over, we would expect initially the parallel action to break above the 1.2855 and start aiming for the 1.2915. And higher than that, we note the 1.2980. Let me readjust these. 1.28. Higher than that, lower than that would be the 1.27. And even lower, the S3, which is at 1.2645. It's interesting how the support lines here move downwards by 100 pips, almost exactly. Actually, they don't. That's the 1.2720. Sorry, guys. So that's 80 round pips down. And another 80, 75, even lower for the S3. Let's clear this. Stabilize this. I'm leaving this as an R4. In red, please. There you go. R4, 1.3075. That's clear. We deleted those the Fibonacci levels. Gold. You know what? Before we move to gold, let's have a look at another FX pair, a little bit more exotic, but an interesting one. That would be USD TRY. Now, USD TRY had a very interesting movement in the past days. Actually, since the beginning of the month, it had started an upward movement on the 3rd of May. There was a very clear hiking path, a very clear upward movement. That was up until around the 15th of May. Let's have a look here. Up until the 17th of May. Maintained a sideways movement practically between Yeah. And, oh, sorry about that. And here. So you can see the corridor being formed practically from the 17th of the month up until this point, which was the 23rd of the month. Since the 23rd of May, the pair has started to rise even higher and is actually testing the 16.40 resistance line right now. We intend to maintain a bullish outlook for that as long as it remains above the upward trend line which has been formed since the 23rd of May. I would highlight though a number of factors. By the way, it would be nice to see also the Bollinger Bands here. Indicators, trend, Bollinger Bands, 20 moving average, 2 deviations. Note how the Bollinger Bands, especially the upward boundary, has started to widen, and that's another indication of the upward movement of the pair. At the same time, note that both the 100, the 50, and the 200 moving averages are both moving upward in an upward slope since the 5th of May, uninterrupted. However, we could do is actually turn the 100 to a 51. It's even more intense. You can see them diverging. That should explain that practically the upward movement is accelerating. At the same time, though, also note the Rsi Indicator. The Rsi Indicator has reached above the reading of 70, implying that the pair may have reached overbought levels and is ripe for a correction lower. So that should not be a surprise for traders. Actually, the Rsi Indicator is warning us about it. And should that be the case, we may see the price action dropping, breaking the upward trend line. And the next question will be whether the trend line is just going to be shifted to the right and down, or whether the breaking will be clean and actually signal a change of trend from upwards to sideways movement, initially between the 16.40 and the 15.74. Should the bulls actually maintain control, we would expect the pair to break the 16.40, probably in the European session, maybe in the mid-American session today, breaking above it and start aiming for 17. Higher than that, we note also the 17.60. Note that the pair hasn't seen such high price action. Let's zoom out to the daily chart. Since the 20th of December last year. It's at very high levels. Note the spike at the day, which actually corrected, tumbled lower. So that's another indication that practically the price action may be ripe for correction lower as well. The height may cause USD bulls to hesitate in this case. It's very nice and interesting chart of what's going to be happening in the next 24 hours. It's a make or break decision here. Let's move to gold. Okay, that's an interesting move. Gold seems to have made its decision already. Let me readjust these levels. Here we go. So, gold's on the move, downward move. It actually broke the upward trend line, guiding it since around the 14th of May. Let's have a look. since the 16th May, sorry. So we switch our bullish outlook in favor of movement initially until the market actually decides on the direction of gold's next leg. Now the precious metal may have weakened also due to a slight strengthening of the US dollar. Let's have a look at where that stands by looking at the USD Index. We're talking about 4-hour charts here, and maybe this one, but nevertheless it's correcting lower. So some stabilization could be in the cards for gold's price as well, unless we may be having here also some influence by US yields. For the moment, we note practically two elements. A, the downward motion has broken the upward trend line, and there is also a downward motion of the Rsi Indicator. And that tends to imply that are slowly taking over unless the pair the precious metal stabilizes somewhat around the reading of 50. Seem to be hesitating somewhat, but downward motion is here. Once again, given the breaking of the upward trend line, our initial reaction would be to switch our bullish outlook in favor of a sideways movement bias between the 1859 and the 1833. Should the bulls take over, once again we may see the price action of gold breaking above the 1859 and start aiming for the 1984, which provided substantial resistance here. Should R2 be broken, the next level could be at 1903, which provided some resistance here. And to the downside, should the bears actually maintain control and drive gold's price lower, as a first sign, we would expect the price action to break the 1833 as one, providing support once, twice, and even lower the 18.07, providing some support here and here, and even lower than that would be the 1787, providing support here. It's actually a very nice chart. Note how the 100 moving average crossed around the beginning of May, the 200 moving average, yet the distance between the two seems to be stabilizing somewhat. That could imply some stabilization as well. On the other hand, also the price action has reached the lower Bollinger Band, and the lower Bollinger Band could also provide some support for the price action of gold in the next 1 or 2 sessions. Once again, the market sentiment is going to be the decisive factor here, and given that the RSI indicator has moved lower, we may see the bears taking over and leading the precious metal, but that remains to be seen. Once again, for the time being, maintain the bias for a sideways movement between the 1833 and the 1859. Also, last but not least, WTI's price. Let me readjust these. 119. 113 as the R1. 110. 107.65 and 105. It's a beautiful chart, people. Note how the price action actually revolves around the 110 level, creating substantial commotion. It's a tight range-bound movement here. And note also how the Bollinger Bands have converged and are practically implying and describing the corridor where the price action is actually moving within. It's very characteristic and shows us how volatility has dropped considerably for the commodity. Nevertheless, to the upside, we note the 113 resistance line. So practically, we would expect the price action to remain between the 113 and the 107.65. 113 provided resistance, a clear resistance line here, while the 107.65 provided some support here. And we would like to note that most probably the divergence will be around the 110. So we have around $3 per barrel to the upside and 2.25 to the downside. Also note how the RSI indicator remains near the reading of 50, just above it actually. Should the bulls take sign, would be a breaking of the 113, which provides resistance, and start aiming for the 115.20. Let's have a look where this touches. Here it is. So the 115.80 provided the resistance on the 24th of March. Also note how it practically was not able to rise even further, given that it had reached the upper Bollinger Band. And even higher, we note the 119, which was last time touched in this period. That was around the 9th of March. That was another touch. Let's have a look at the downside. So to the downside, and should the best take over, would expect the price action to initially, when we adjust these, break the 110 clearly, start aiming for the 107.65, and even low we note the 105. Another additional support line could be placed somewhere here. However, that's a little bit price action. Let's zoom in a little bit. See these two nice touches here? Also here and here. There is some respect here. And it's being placed at 101.25. Should not be underestimated either. Once again, bias for a sideways movement is for the time being our main base scenario, and that should be around the 110, with the upper level being the 113 resistance line and the lower level being the 107.65. Also note the Rsi indicator, which tends to remain near the reading of 50, confirming a rather indecisive market as for the direction of the commodity. That should be it for the day. From all of us here at IronFX, best wishes for solid trading.
Hello everyone, my name is Emily and today I'm going to give you a short walkthrough of our website. Let's get started. So this is our main page. On your top right corner, you see the option login for existing clients. And then you see the option register. So if you're not an existing client, we should fix that, right? And then we have the search bar, and from here you can choose the language that you want to use with us. Then we move on to markets. With IronFX, we offer over 200 trading instruments. For example, we have forex, metals, indices, commodities, futures, shares, and cryptocurrencies. Moving on, we're going to this option right here, trading. You can find the account types, spread comparison, and a couple of trading tools. So I want us to check out the account types today. If you scroll down, you'll be able to compare the IronFX account types. You have two options right here, the live floating, live fixed spreads, and the STP ECN accounts. So with the first option right here, you have 4 different account types. We have the standard account, the premium account, VIP, and live zero fixed spread. Here you have the CFD instruments, the minimum lot size, base currency, spread, commission, and we click on expand full list, and we move on to the flexible leverage, stop out. We also offer swap free and Islamic account option. And this right here is called dedicated account manager available. So as soon as you open the trading account with us, one of our representatives will give you a call and start assisting you with your experience with IronFX. Moving on, we have the dealing department transaction hotline. Then we scroll up again and we choose the STP ECN accounts. Here, the difference is that you have 3 account types, no commission, zero spread, absolute zero. And again, we have the CFD instruments, minimum lot size, base currency, spread, commission, and we click on expand full list. And you have the flexible leverage, stop out. The difference here is that we do not offer the option of a swap-free Islamic account, but we do offer the option of having, again, a dedicated account manager and the dealing department transaction hotline. So after comparing all of your options, comparing the account types and finding what suits better your own needs when it comes to trading, you just click on register and you proceed with the account type that you wish. Then we scroll up again and we move on to platforms. As you see here, we have MT4, WebTrader, VPS hosting, PAM, and Trade Copier. Then we move on to the IronFX school. When it comes to this option, I truly believe that every broker should have this option for their clients, even if you're a beginner, even if you're an experienced trader, because at the end of the day, knowledge is power. And you see loads of options right here, but I want us to check out the newest addition, which is webinars. So here you see live forex webinars. It is free of charge. You're not going to pay a single cent when it comes to this. You just need to register with us and get started. If you scroll down, you'll be able to see the webinar that suits you better. Which webinar is best for me? So we have beginner, intermediate, expert, and then you can, of course, view them all. Then if you scroll down, you'll be able to see which webinars are we hosting at the moment. You have English language, Spanish, Portuguese. You can just simply click on register, and that's it. Then moving on, if you scroll down, you will be able to see our educators. That's all you have to know when it comes to our webinars, but obviously if you want to know more, you should tune in and watch one of them. Then moving on, we have this option right here, which is blog. So basically here you can get inside information when it comes to forex news, the market, and also you can get some successful tips when it comes to trading, which is actually very cool. And the next option we see here is promotions. As you can see here, you can check our trading competitions and etc. And then we have the option right here, which is partners. So as a company, we want to build a very strong long-lasting business relationship with our clients. So that's why we offer you this partnership program. So for example, we have the introducing brokers, the affiliates, and the white labels. And then last but not least, we have the IronFX option. So whatever questions you have or whatever information you need regarding the company, you can just simply click here and you can see why us, careers, legal documents, frequently asked questions, sponsorships, awards. And if that is not enough for you and you want to learn more, you can, of course, contact us using our live chat support or by email. So that's it for today, guys. Thank you so much for tuning in and watching us. And I hope I'm going to see you very, very, very soon for our next short version of a walkthrough. Thank you very much. Have a good one.